What's up everyone, Matthew Winters here and welcome back to my channel. Today we're going to take a look at two must-have dividend-paying stocks that pay out every single month. Now, for the most part, dividend-paying companies pay out quarterly, but REITs and even some energy sector stocks do pay out monthly. It does make it nice to have consistent dividends paid out each month as opposed to every 3 months or even annually or semi-annually. Now, if you're new to investing and want to use the same brokerage I do, which is Robinhood, use my link in the description below and you and I will get a free stock with a possibility being valued at a couple $100. It is absolutely free and a great platform to start investing. And also, if it's your first time here, don't forget to hit that like button as it really does help grow the channel. And if you enjoy the video, make sure to subscribe for future dividend investing content. So really quickly before we start, let's take a peek at where the portfolio is sitting at. If we look today, we can see we're up $710, roughly around 1.4%. If we look at the 1 week, we can see we're up about $2,000 or roughly around 4%. If we look at the 1 month, we can see that we're up about $3,700, roughly around 8%. And if we look at the 3 month, which is basically the lifetime of this portfolio, we can see we're up $5,400 or just around 12%. So before we start, I do want to mention that both these companies I'm talking about, I do personally own and carry in my dividend investing portfolio. I not only invest in these companies for the dividend monthly yield, but also because I believe in the long-term health of these holdings and feel they are a solid investment for the long term. So first up is no stranger to this channel, and it is Pembina Pipeline, ticker symbol PBA. Pembina is a major transportation and midstream service provider with a network of oil and gas pipelines, storage facilities, and processing plants located primarily in Western Canada. Pembina has 3 business segments. 58% is pipelines, transporting crude oil. 29% is facilities, processing natural gas and natural gas liquids. And 13% is marketing and new ventures, which I like to see as it does show that Pembina reinvests in itself. Now, Pembina is also the largest third-party gas processor and is one of Canada's largest storage owners, making it a critical partner for most its customers. And with a diversified portfolio of assets, plus plans to expand its reach into petrochemical facilities and export terminals, Pembina's infrastructure is uniquely positioned to transport almost any product a customer can drill for, which in turn maximizes netbacks received by producers and provides the greatest options for its customers. Now, I also like Pembina because their asset base is predominantly supported by long-term fee-for-service take-or-pay contracts. Pembina has a dividend safety score of 80, which is safe, and a 5-year dividend average yield of 7.08%. They have also had uninterrupted dividend payouts for 23 years and have steadily increased their payouts for 8 years. So Pembina has a healthy dividend safety score, an amazing dividend yield, and a healthy infrastructure, making this investment a no-brainer. The second monthly dividend company is no stranger to the dividend investing community, and that is Realty Income Corporation, ticker symbol O. Realty Income started with a single investment in a Taco Bell and now owns more than 6,400 properties across America that are leased to about 300 commercial tenants in 50 different industries. Retail properties generate 83% of the REIT's rental revenue, but the firm also owns industrial warehouses, which accounts for 11%, offices at 4%, and even farmland at 2%. Now, obviously, REITs have been hit hard by the coronavirus shutdowns due to tenants not being able to pay their rent with no income coming in. However, Realty Income has fared best and even beat expectations out of all retail REITs, collecting 83% of rent during April when most businesses were still shut down. And if we look at the diversity of Realty Income industries, we can see the top 4 have fared well during coronavirus-related shutdowns so far. Convenience stores are 11.9% of the rent, drugstores at 9%, dollar stores at 8%, and grocery stores at 7.7% all remain open and provide essential goods at low price points to consumers. Now, Realty Income has a dividend safety score of 70, which is safe, and a 5-year dividend average yield of 5.10%. They have both an uninterrupted and increased dividend payout for 25 years. Now, one thing to note is that REITs are pretty volatile investments, and during this unprecedented shutdown due to the coronavirus, makes these investments unpredictable in uncharted waters. However, Realty Income is arguably the most reliable monthly dividend stock in the market for conservative investors seeking a blend of current income and moderate but dependable payout growth. Anyway, I hope you enjoyed the video. If you did, make sure to smash that like button because it really does help out this little channel. And as always, if you want to follow me on my dividend journey, make sure to hit that subscribe button. If you're new to investing and want to use the same brokerage I do, which is Robinhood, use my link in the description below and you and I will get a free stock with a possibility being valued at a couple $100s. It is absolutely free and a great platform to start investing. Anyway, trade safe, take care.